Mortgage guidelines are the rules, the checklist that mortgage lenders check against to approve and fund a mortgage. To learn more, stick around after this. I'm Dan Green with homebuyer.com. My MLS is 227607. Our lender MLS is 423065. We're a part of Novus Home Mortgage, a division of Exonia Bank. Read more about homebuyer.com in the video's description, including our lending coverage and some very important disclaimers. Also, don't forget to hit the subscribe button because this channel is full of excellent mortgage video. And I'm a mortgage guy. Talk to a separate licensed expert for your legal, tax, and financial advice. This video is about mortgage guidelines. So let's jump in. Mortgage guidelines, they're the collective set of rules, the requirements and standards that lenders use to underwrite and approve a mortgage application. They're the traits that we think of when we say, what do I need to get this loan approved? The mortgage guidelines, they vary by loan type. A conventional loan or a conforming mortgage, which is so named because it literally conforms to the guidelines set forth by Fannie Mae or Freddie Mac. It carries specific standards for credit scores and minimums that a buyer must meet for household income as compared to their household debt, or for assets and savings in the bank for citizenship. And these guidelines that apply to a conventional loan and its approval, they're different from the guidelines that apply to applications for loans that are backed by the FHA, which are based on the FHA handbook. And the FHA handbook requires that buyers move into their home and take residence within 60 days because FHA guidelines state that it's primary homes only, no vacation homes, no rentals. It's an example of a mortgage guideline. VA mortgages, they have their own guidelines too. The most well-known guideline from the VA Seller's Guide is that VA loans are available to active duty military veterans, surviving spouses only. Now that requirement of having a certificate of eligibility from the Department of Veterans Affairs, that's another example of a mortgage guideline. Every loan program has guidelines. Some are very specific, some are very broad, but all of them are pass-fail. You meet a program's guidelines, its minimum standards for approval, and you pass that guideline. Now that's how a lender thinks of mortgage guidelines too. It's like a checklist with items just to check off and confirm. If you check all the boxes, the loan is approved. Now sometimes, and this is important, in addition to the official guidelines set forth by Fannie Mae or Freddie Mac or by the FHA or the USDA or VA or whomever, mortgage lenders will implement their own set of guidelines on top of what's minimally required, like a layering. We see this a lot with credit scores. The official FHA guidelines state that the FHA will insure mortgages for buyers whose credit score is at least 500. So the official minimum credit score to get an FHA loan is 500. However, mortgage lenders will often overlay their own minimum standards on top of the FHA published guidelines that requires eligible buyers to have a credit score of 580 or maybe 620 or 660, which is why sometimes a mortgage application might be turned down at one bank but approved for a mortgage at another bank. These lender overlays, they're additional eligibility requirements. They're mortgage guidelines that are specific to a lender and not to the loan itself. It's why if your mortgage application is ever turned down because you don't meet mortgage guidelines, that turn down may not be final. It just may be final with that particular lender. Consider shopping around. Also, mortgage guidelines change. It happens dozens of times per year. Big changes, small changes, modifications to meet the market. In 2023, for example, Fannie Mae and Freddie Mac reduced the down payment requirement for eligible buyers with multi-unit home. That's a home with 2 to 4 units. Eligible buyers used to have to make a 25% down payment. Now, the Fannie Mae and Freddie Mac guidelines say that buyers only need 5% for multi-unit. Now, the FHA has changed its guidelines too. It used to disallow rental income as part of an application from buyers with accessory dwelling units, ADUs. Now, the FHA lets applicants use it, which helps FHA applicants show more annual income, and so on. Mortgage guidelines are living, breathing documents, which, by the way, if you printed them out, they'd stack 1,200 pages high. And it's a good reminder that as times change, those guidelines change. Heck, even the examples in this video could change. Mortgages turned down last year, maybe mortgages approved today, and not because a buyer looks any different on paper, but because the framework, the mortgage guidelines underpinning the approval, that's what's changed. I'm Dan with homebuyer.com. Remember, pre-approved buyers do better. Happy home buying.